finding people that have a good, strong skill sets that complement your own, that can make for a good business relationship. When I set out to go into multifamily, I set out with that intent to find the right people that had the right vision and the right skill sets we needed to grow to where we wanted to go.
If you're a residential real estate agent earning $200,000 a year and you want to grow your passive income, this show's for you. Learn the secrets other agents use and hear from experts in our field in order to guide you along your journey to investing in assets like apartment communities so that you can turn your commissions into cash flow. I'm Randall DeCleared. Let's go, baby. So yeah, without further ado, welcome Cody to the show. It's great to have you on today. Thanks for joining us. Look forward to it.
Randall, man, I'm excited to be here, man. Appreciate you having me.
Awesome. All right. So why don't you start off and just kind of give us an idea of how you got into real estate and like how you got started and where you are in the space right now?
Yeah. So Cliff Note version, I started my W-2 career in healthcare 2008. And in 2010, my wife and I tried to sell our very first starter home. We had purchased that in 2008 as well. And the housing market, for anybody that's old enough to remember, was in the dumps still, right? This is post great financial crisis. And we're trying to sell this house. We bought a second one and we couldn't sell it. And we were like, we couldn't afford to pay 2 mortgages. I mean, we're 2 years out of college. We're broke. And so we were in a little bit of a panic mode and we're like, what are we going to do? So the first instinctive response was, well, hey, I'll just put a tenant in there. We'll lease it out and then we'll kind of figure it out from there. So I found my way into real estate by accident. I became an accidental landlord. But man, looking back 12 years later, so thankful that happened. So I started 2010, spent the better part of 8 years, the following 8 years, pursuing a bunch of different strategies in residential real estate, wholesale, direct to seller, those type things. Tried some non-real estate related businesses as well. And I was just getting frustrated time and time again with the amount of time and effort I was putting into the business, but getting very little return on that time and effort. I wasn't really finding any scale or momentum. And I finally just kind of had this moment around 2018 where I was like, I need something that's scalable. I need a model that is a little bit more efficient because otherwise I'm never going to reach my goal of being a full-time real estate entrepreneur. And that's what led me to multifamily real estate, which we started in 2019. Fast forward late 2019, 2020, I met my partners, Brian and John. We formed Blue Oak Capital. And yeah, I mean, since then, we've gone full in on multifamily real estate. We're general partners and owners in 847 doors. That's about a $116 million portfolio now. We just added a industrial space as part of our portfolio. So doing some big things, man, making it happen.
Yeah. That is an awesome ramp up and trajectory from where you were just a few years ago. But I want to highlight a couple things that you said there. One, because I went down that same road as you. Like I was down in that journey of the residential side and flipping houses. And my thought was, I'm going to scale this. I'm going to be able to do so many houses and just take everything on and started hiring a bunch of people in order to have the project managers managing a bunch of general contractors so I could do, a ton of flips. That was the whole idea. And so, yeah, I'm sure somebody has figured it out, but I certainly did not. I mean, it was like the more contractors I had to wrangle, the more difficult it became and the more people were putting their fingers in the pot. And so it just became this thing and it was not scalable. 100% was not scalable in the sense of, like, I don't know, I think of like tech and I've thought of startups a lot and like, how could you scale something? And it just wasn't that. So I second that. So you tried wholesale. What else did you try? You did wholesale, you did rentals, or you had a rental that you kind of fell into. Did you build that side of your portfolio at all? Or it was like one and done?
Well, unfortunately, looking back then, I was much younger and a little less focused. So I started chasing some shiny objects. So anything that flashed in front of me that said, hey, you can have this type of earning potential, I was all on it. And so I never really found a lot of momentum that way either, because I was just chasing the next best thing, right? So wholesale, again, direct to seller campaigning. I did try doing some flips as well, did a couple flips. And to your point, number one, I was working myself into a second job. It was every single day after I was leaving the hospital. Every weekend, I was over there having to manage contractors, doing all the work. And then I realized too, it was transactional. And this is something probably, your audience relate to as agents, right? Is that's a very transactional side of the business. So yeah, you get a commission or you get an earning or proceeds after you make a sale, but then what? That's a one-time check and then you got to go do it again. And that's where the model becomes disconnected because you can't scale that. It's not sustainable. So when you think about real estate investing, wealth is built over the long term. You build your wealth in real estate when you buy and hold real estate. Then I started looking back at like, okay, well, I'll just go add portfolio of all these single family homes. But then I was doing the math and I'm like, wait a minute, if I'm only making a couple $100s a month on each and every home, how many houses do I have to accumulate to build up enough passive income that I can actually live off of? And I did that math and I was like, no way in hell do I want to have 200-300 single family homes and try to manage 200 to 300 individual headaches. It's just too much work. And again, that's where multifamily really drew us in, because you have economies to scale and you can condense all of that into one transaction and such. So yeah.
Yeah. Okay. So the wholesale was kind of short-lived type deal. I'm doing a deal where I'm going to go through and kind of highlight where you are in your investment journey and where you are as far as your cash flow and experience, to kind of give people idea and listeners an idea of like, okay, maybe you should try this strategy. But wholesaling is kind of like you're no money, go out, hustle. You can find a deal, right? You're in, but it is 100%. You stop working, the money stops coming in. You're not building. And we had a big crew. Like we had an office, we had guys going out, we had acquisitions, we had disposition, we had everything. It was all working. And so it was kind of, you could get to the point to where it's kind of automated, but we went to the route of, should we bring in a COO and have somebody run this thing? And I really couldn't step away from it still. So yeah, again, getting into the multifamily space and seeing like you're buying a business, you're buying something that's operating, you have the economies of scale to hire the third party professionals to do all the work, right? It's just, I second it all. I joke because the way I described my journey was like, I got in and I wandered the desert for like 10 years, just kind of chasing the shiny objects or just chasing a deal, chasing the closing. And luckily I invested into real estate. I was buying and keeping and holding some things. And so I have cash flow coming in from those investments and assets. But in general, man, if you're not looking at scale, then it's just you're a guy running around with like a truck and a hammer trying to solve problems. It's like, fixing toilets.
Well, you highlighted the most important point there is, like you said, you couldn't step away. And if you did, the system falls apart. Right. And there's all these different tools and resources now to let wholesalers automate their business and such. And you have either, like you said, there's people that are having some success doing that model. But like you said, if you as one variable to that equation step out or remove yourself and the whole thing falls apart, is it really a sustainable model? Not really,
Yeah. And the way I looked at it as well, because, it was like, man, but there's ways that you can start a business, you can run a business, and then it's a sellable business. So if you're building a book of business over time, then great, you have a book of business, you can sell insurance. There's a number of models that you can do that with. But I didn't feel like wholesaling as a business, even though we were doing 8 figures and we were doing well, 7 figures, sorry, not 8, but we were doing well. And, it just wasn't like a book of business that I could sell. Like if I turned it off, it was like anybody can go and replicate that model. So anyway, we got down that path quite a bit. So you got into the multifamily space. What drew you to, I'd say, multifamily over some other asset classes? Because it sounded like you said you had a few other businesses that you were dabbling in. What'd you try and pro con it for me?
Oh man, let's see. I've tried some multi-level marketing companies selling some consumer products, some of which I didn't even use, which was crazy. I wasn't a salesman by nature, so that was just a terrible model to begin with. I tried getting into a fitness franchise. I did sign a licensure for a 3-unit fitness franchise that took about 3 years and about $120,000 lost to get absolutely nowhere. And I had to walk away from that. So learned a lot of valuable lessons through that. And that was probably the biggest bulk of my other business ventures, was spending time around that. And hindsight, again, looking back, I'm like, hey, I'm thankful I went through it, but it was quite painful at the time. And $120,000 lost that's a substantial amount of money. So
yeah, I have a bunch of questions now. Like, okay, what was it? And why did it not take off? Or what, just high level, if you want to talk about it. If you don't, like, it's okay.
No, I love sharing it because it's very relatable to what we do in multifamily, right? Where it was a fitness franchise called Tap Out Fitness. It was kind of an MMA based fitness chain that was more geared towards a general fitness person. You don't have to be an MMA to go and do this gym. So I love the concept. I'm a UFC fan, love MMA. But getting into it, first lesson we learned the hard way is it was a new franchise. There was only 2 prior units open. I think I was the third. franchisee to sign a licensure. So I got into a new franchise, which you never want to do. Second thing, I didn't do enough due diligence, and more so on the amount of capital required. So there's in the licensure agreement, there's defined capital requirements that you have to have as far as net worth, liquidity, and such. And I had a couple partners I pulled together to kind of pull those resources together. But that led me into another issue where my partnerships, good friends of mine, close friends of mine, people that I'm still friends with today, but just because you're good friends with somebody doesn't make them good partners, right? And signed a franchise agreement, we got going. And then sure enough, I mean, very quickly, one partner backs out. Another partner had too many hurdles he had to overcome personally that kind of removed him from the business. And so I was left with one other person. So, our liquidity, our net worth requirements were kind of cut in half. And so we had to kind of readjust our fitness model as far as the unit size we were trying to acquire and build out. And eventually after 3 years, he was just like, look, man, this is going nowhere. I'm out. So number one, kind of having a misalignment of interest, so to speak, with partners, not having partners that are monetarily committed was another lesson learned. And again, not doing enough due diligence to make sure that, number one, we could even pull it off. And unfortunately, that kind of fell on my shoulders. So,
were you working at the time still? Yeah. So this was just a hot side investment. You were like, this is going to take off. And were you going to be the guy running the entire thing, or was it that was part of the partnership?
Yeah, no, I mean, that was the goal, right? As I was going to step into that and then use the gym as kind of my income. I was going to take a salary from it. I was going to run the operations, learn the business side of it. And I saw that kind of as my path to exit the corporate world. Yeah. And it 3 years of headache ended nowhere.
I wouldn't say that. I would say the lessons you just shared, one, is huge because like right now, currently I've been looking at franchise opportunities, right? A buddy of mine up in Denver, he's Everbowl. He like took over entire Denver market or part of Colorado, and he's killing it. So those types of investments are interesting. So yeah, $125,000, but you probably learned a ton from it. And then what I was going to say, just having talked to Brian, seeing you, I don't know who your other partner is and haven't met him, but how did you, one, it's a testament that you now have new partners. That's like a big takeaway. But two, it's like you went back out to find partners, it seems like, right? So you could take it as like, oh man, partnerships suck. I'm not going to go do that again. So what got you over the hurdle to go out and partner again in a new venture, right? Talk to that, just because I think it's really impressive, I would say.
Yeah. Well, I think if you look at all the successful people in the world, they all are standing on mountains of failures, right? They all have had challenges and failures and mishaps along their way that have built them to who they are and led them to their success. And so I looked at that opportunity, as disheartening as it was to not get a unit open and get things moving. I saw it as, like you said, a learning opportunity, and say, okay, what mistakes did I make and how can I do it better? And I never wanted to be a solopreneur, is what I like to call it. And that's where a lot of people in residential real estate, they're solopreneurs, right? The barrier to entry is very low. You can really pull together your own resources to kind of get in deals. You don't need a team per se to really kind of acquire residential deals. Well, in business and in multifamily, you have to have partners. You have to have a team around you. You can't carry all the hats. And so I just took this as a way to say, okay, I'm going to take what I've learned as far as who am I going to work with and making sure that those alignment of interests are firm and truly congruent. And then I'm going to go find the right people that are going to help me scale the business that I need to. And I had to realize, look, I mean, I'm only one person and I have my strengths, but I also have my faults. Right. And so when you're part of a team and you can find complementary skill sets that complement both your strengths and your faults, that is a recipe for success over the long term. And so that's really the biggest takeaways for me, is really identifying people that are going to be committed, people that, I'm not necessarily even friends. I mean, I'm friends with my partners now, of course, we're very close, but like,
not just because like those guys, man.
No, but just because you're friends with somebody, again, that doesn't equate to a good partner, right? And so finding people that have a good, strong skill sets that complement your own, that have that as alignment of interest, that can make for a good business relationship. And so that when I set out to go into multifamily, I set out with that intent to find the right people that had the right vision and the right skill sets we needed to grow to where we wanted to go. So.
Yeah, that's awesome. Great story, though. Thanks for sharing that, because, again, it's one of those things that you can get siloed and just work in your own lane. You could have just stayed at the hospital and not even thought about investing or doing any other kind of outside thing. Like, hey, just go to work, go home, go to sleep, go to work, go home, go to sleep, So kudos, one, for trying it and then failing forward, right? That's the thing. So if that's a good takeaway for you.
It sure is, man. And I used to kind of, I don't say shy away from sharing that story, but, a lot of people have a tendency to not want to share their failures because they think it makes them look weak. But again, you have to realize that the most successful people in the world all had failures, and that makes you relatable and it makes you experienced, right? And 100%. It's through those hard lessons learned that you have the best takeaways from. So
I still think
I enjoy sharing it.
Yeah, I think, man, it's we could, I don't know, you pay for your lessons. So yeah, we won't harp on that anymore, but yeah, good for you. So you got into the multifamily again. Why multifamily though? What was it about multifamily that drew you to it over industrial or something else,
Yeah. So multifamily in particular, obviously housing in general just makes sense, right? I mean, people always need a place to stay. So the idea of having investment real estate where people need to live just made sense. That's always going to be a high priority need. And then second of all, I looked at the economies and scale and said, okay, well, instead of trying to go buy 100 single family houses and have to go through that process, which seemed too daunting, here's the idea of going to buy a 100 unit multifamily community in one transaction under one roof, quote unquote. To me, that just seemed like an easier model to wrap my head around. That just seemed like, again, that's that economies of scale, right? Where I was like, okay, I condense the amount of units I can acquire into fewer transactions, which will help me scale over the long term. The third thing that I really liked was the barrier to entry. And again, I referenced residential real estate. I mean, the barrier to entry is so low, right? Most people start out their investing career in residential real estate because really you can it doesn't take much to get started. But in multifamily, when you're buying 10, 20, $30 million deals, it's very rare that you find one individual that has the capacity or resources to do that on their own. So I was attracted to the barriers of entry because I knew, even though as difficult as it would be to break through, if I could get in, then all the people that were coming behind me are going to have a harder time getting in, just as I did. So I just liked the model. It made sense. It's operating a small business, which I was drawn to, hence trying some other business ventures. I liked the economies of scale, and I liked working with a team. Again, I didn't have a good experience with the franchise, but I have two amazing partners now who complement me very, very well. We all contribute to the team in our various roles. And I mean, that's the only reason we've been able to have the success we've had in such a short period of time is because of those guys. And so long-winded answer to your question, but that's really what drew me to multifamily. So
yeah, that's good. So, and then you had another deal. I don't know if you want to talk about that. I'm just kind of curious. Was it storage? Was it industrial? What did you guys just take down something?
Yeah. We partnered with a group out of Kansas City to acquire a 208,000 square foot flex industrial space. And we're very bullish on multifamily. That's still our preferred vertical. But, we were looking at just the trends in the market and how bullish things have been. We've seen the asset values inflate, and we were finding less and less compelling opportunities that were really delivering those risk-adjusted returns. And so we were looking at other alternatives to see what else is out there, what's happening in the industry around multifamily. And then we stumbled across industrial, and through research and through participating in some networking events, we were intrigued to discover that industrial had been performing quite well along with multifamily. It's multifamily and industrial together were the top two performing asset types in commercial real estate over the last several years. And then we were looking at just the underlying fundamentals of industrial, and they're very parallel to multifamily. And so again, it was a very easy model to understand, and we felt like it was pretty interesting. And we found this opportunity with this group in Kansas City, and we just acquired that one, I think 2-3 weeks ago. So
this show is sponsored by Ridgeline Investment Group. Ridgeline has a track record of transacting more than $53 million in assets throughout Texas. Ridgeline is currently looking to acquire 100 to 200 unit Class B multifamily communities between 5 and 20 million in San Antonio, Temple, Waco, Tyler, and other secondary markets in Texas. To learn more about Ridgeline Investment Group, visit www.ridgelineig.com. Congrats. Yeah, congrats. So you got in, you guys are operating now. So I guess the structure that you got two partners. And you guys, what markets are you guys typically focused in?
Central Texas. So we're based in Houston. So Houston, San Antonio are our two primary markets that we focus in. And then that's for our own acquisition pipeline. And then we'll partner with people in other demographics, other states.
Okay. So you'll co-GP with people, and is that what you mean?
Oh yeah, absolutely. Okay. Yeah. We love co-GP and we love partnering, and there's plenty of opportunity in areas outside of Texas that we'd love to get in, but just doesn't make sense for us to go try to build a footprint there when we have so much opportunity here in Central Texas.
Yeah. Houston I've seen quite a few opportunities, but like everybody that is looking at them, they don't seem to pencil. There are a lot of things hitting the market over there, but I don't know if any of them are really adjusting their price just yet. So,
well, if it makes you feel any better, it's not just isolated to you, man. Nothing has made sense for a very long time here across Texas, so anywhere in general. But I think that is actually moderating very, very quickly, and we are starting to see things, kind of moderate back to historical norms and such. And we've seen a significant contraction across Central Texas. I mean, Houston, for example, was a sub 4 cap market in March of this year. We're now underwriting deals at 5.5 cap, which is a massive contraction in the market. So opportunities coming for sure.
Yeah. It's just the debt issue right now, right? So what do you see, not just in the market, I guess, but for your firm? Like, how are you guys currently weathering the storm? I know you just closed on that deal. So are you looking for more of that industrial type product, or are you still like, hey, we're just ramping up? Or what are you guys working on, I guess, now in order to weather the storm, I guess you could call it, like get through the lull in the cycle?
Yeah. So we're still staying active. I mean, we're still sourcing deals. We're still underwriting deals, although deal flow has slowed down tremendously. And I think it's going to be a very slow Q1, Q2 going into next year. But right now, for us, the biggest focus is on operations, really making sure that the assets that we do have under management now are performing well, that we're managing our expenses the best we can, and just keeping residents happy and keeping our buildings full. Because I think also the concern that we have going into next year is I do think that we may potentially run into an affordability issue. And what I mean by that is I think that, the Fed's monetary policy is going to have a negative impact on the economic forecast for next year. Now, how severe, we don't know. But look, the Fed is purposely trying to drive up unemployment, right? The market is just so hot right now that the only way in their minds that they can break the back of inflation, aside from rising interest rates, is they have to cool off the labor market. And I think that will have an impact as property owners when it comes to occupancy and new lead conversions, because if people are getting unemployed and laid off, that could potentially affect both your retention and your new leases coming in. So we're just really focusing on operations, really paying attention to what the market is saying to us. And that's as far as how far can we push rents, how far can we push other income. Again, our operating expenses are up. So just kind of managing all that to make sure that we're doing the very best job we can to push our NOI and keep our NOI stabilized over this next year.
Do you see a scenario where rents could actually drop if the affordability issues if that actually comes to pass and people are losing their jobs and rates can't outpace the income? Is there a world you see that in?
We're already seeing it. And that's the thing that people really need to be paying attention to is we were seeing double-digit rent growth Q1 of this year. And now we've seen this softening and kind of plateau. And then now we're having to pull back a little bit. Now, look, we're still up relative to the beginning of the year, but we are having to pull back a little bit because what most people aren't being transparent about is delinquencies are creeping up. People are now starting to run into issues where, hey, I can't pay that $1,500 rent anymore. They spent all of their discretionary savings. And now you're starting to see, again, collections tick up, bad debts are ticking up, and things, loss to lease is increasing. So I think you're going to see that more and more over the next couple of months where rents are going to moderate and soften. And you're going to have to see it pull back some.
Yeah. One thing to keep an eye on if you aren't, it's the consumer debt, right? That has shot up in the last year, 2 years. Even though everybody was getting free money from the government, they were still borrowing more than they ever have. And so that has been a concern of mine, just looking at the amount of personal debt people have taken on. And so if softening of the economy, they lose their job, whatever, and they're in more debt than they've ever been in, then it's a bad outlook there. So thanks for speaking to that. So kind of curious if you want to talk about, I don't know if you have a worse real estate deal than your, but I'd like to get a real story. Worst or best deal, if you want to talk about one. Just talk about, I guess, your best deal that you've done. Just because the lessons learned, we already kind of talked about lessons that you took away from that one deal. So yeah, what's the best deal that you've done and why? Could be any kind of investment that you've made.
Yeah. So the best deal that we've done to date was probably the third deal that we partnered in last year. That was on an A-class deal right outside of Fort Worth, Texas, in a little tertiary town called Weatherford. And for those of you who are not familiar with Central Texas or this particular area, Weatherford is about 30 minutes west of Fort Worth. And small little population town, but there was a massive path of progress moving that way, especially post-pandemic. People looking for remote work. They don't want to commute in and out of these large MSAs anymore. So now you saw this high demand for kind of more suburban living for people with families and such. And so there was this 396 unit A-class deal in Weatherford, Texas that we partnered on with another well-established group. And that deal has been on fire. I mean, our occupancy has been well above 96% over the last probably 6 to 8 months. We've seen massive rent growth in that area, fully stabilized. I mean, the demand is just crazy. And so unfortunately, the timing of this market, we got a very attractive BOV recently on that deal that was so good, we just couldn't pass it up. And we told the broker, like, hey, if you can get this, we'll have a deal. And obviously the debt constraints right now are working against us and deal's not going to trade. But I mean, that deal in itself is by far the best performing deal we have. I mean, it's just humming along. Operationally, it couldn't be going smoother. And when you look at kind of the reasons why, again, great fundamentals, great location with great drivers, high demand, path of progress, a great demographic that can afford that type of rent that we're pursuing. And we are very bullish on Core Plus product, and that's your A and B kind of product. Because when you have a new product, you don't have the deferred maintenance headaches. You don't have all the capital expenditure headaches that you have to go, and you have all this things that you have to fix up, piping, electric, roofs, and things like that. This was a 2021 build or 2020 build. So there's nothing to fix. You're just kind of enhancing the amenities that are in place and giving the residents an efficient home to live in. And so we're really drawn to the newer product because you don't have all those heavy capital expenditures that you have to spend on that as well. So that was just kind of a perfect storm of all the right circumstances in one deal that has made it the best. Now, if you want to talk about the worst deal for me in multifamily, in 2019, I was partnering with another group right after I just jumped into multifamily. I had met this guy out of Dallas who I'm still friends with today. Him and some partners were acquiring a deal in Tulsa, Oklahoma. And he was like, hey, we could use some help on the capital raise. Would you like to join us on that? And I was excited, man. I was like, yes, this is my first deal. I'm in the game. It's been 3 months. Here we go.
Have a ride.
And make a very long story short, I had like a really small commit, like a $300,000 raise from my commit. Raise is $0. $0. And I did everything wrong in that deal. Everything from not being educated enough, not being articulate enough, not being able to source the right investors, chasing investors because I was desperate. I mean, just all the things that you're not supposed to do as a capital raiser, I did. And ultimately, the deal ended up closing. There was a passive investor that stepped in, covered my portion of that commit, and I basically sold them the rights to my position, and I got out of the deal. But that was probably the most painful lesson I learned in multifamily on my very first capital raise. But like anything else, looking back, it was a great experience because now we've raised several $1 million videos that we're a part of. So
yeah, awesome. Well, thanks for sharing that too. Yeah, it's tough. I've felt that. I've been through that journey as well. For another podcast, another time, I can tell my story. But right now with your investors and what you're seeing, if you were to speak to a brand new investor today, like we got listeners who are never invested, never done anything, they know real estate, understand real estate, but haven't taken the step to actually get into it. What's some advice you might give them?
Right now, I would tell you, number one, don't get the FOMO syndrome. Don't get the fear of missing out syndrome, because right now is probably the most challenging time that we've seen to invest in multifamily than we've had in a very long time. I was speaking to a group of operators that have been around for 30 years. And their comment to me was, we've never seen a market cycle like this, both when things were very bullish and now this massive contraction we've had. So I think right now is a time to be very, very patient and spend a lot of time getting yourself educated, getting in the right networks, going to the right groups and meetings, learning as much as you can about the fundamentals of investing in commercial real estate. before making any moves right now. Because I mean, even experienced groups, much more experienced than we are, we're all having challenges trying to navigate these very choppy waters. And I think that's going to continue through all of 2023. The next thing I would tell people to do is, if you're looking to get started, start off of being a passive investor, right? Go invest in somebody else's deals with an experienced operator who's done several transactions, who knows how to put these deals together, and be an active passive investor. Tell that sponsor, like, hey, I want to learn the ropes of the business. Can I ride your coattails, and can I participate when appropriate so I can learn the behind the scenes so that I can go be an active investor one day? That would be the two best pieces of advice that I would give. And the third thing I would tell people is start building out your network now. Understand and identify what your investing thesis is today, and then go build your network of other, whether potential partners, passive investors, or whatnot, to help you get to where you want to go. Because this is all about relationships, right? It's a network equals your net worth type of game. And so build out your network now. It's a great time to be building relationships, planting seeds for when things are ripe again to be investing. You know, you want to be doing those now. So
yeah, 3 golden nuggets right there, from a few units to 160 AUM, 160 million AUM. Is that
116? Yeah, 850 units. Yeah. And, you know, and it's fun because it took us 2 years before getting the first deal. And I think that's what people need to really understand. This wasn't just a, hey, we got in and we got the first deal. It doesn't happen that way. There's a lot of work that goes into building the infrastructure of your business to get you to a point where you can sustain that growth. And so, you know, we tell people, like, man, the real work was in the 2 years that we spent building out our brand, building out our marketing, building out our CRM, doing all of these things and putting all these pieces in place. So that way, when we got in the first deal, we could scale more rapidly from there. So,
yeah. And that's if you want to be active. I mean, the passive side of it is relatively straightforward. It's finding a good operator and investing in the deal. And so, yeah, that's a super easy in on the deal. If you want to be active, certainly, you know, do exactly what you said, is, you know, figure it out, be involved, show up to the meetings and that sort of thing. So awesome. Well, I appreciate the advice on that. And I know the listeners will as well. So I want to wrap up with some rapid fire questions here, just to kind of get an idea a little bit more about the man behind the scenes. So what are some of your favorite pastimes, or what's your favorite pastime not related to real estate?
I love fitness. I love being in the gym. I love working out. Physical fitness is one. I'm an outdoors kind of guy. I love, like, I'm kind of an adrenaline junkie. So I love things like skydiving. Used to ride crotch rockets. I'm a licensed skydiver today. I love.
Today? She went?
Huh?
She went today?
No, I didn't go today, but I'm a licensed skydiver.
Oh, you're licensed. I thought you said my wife went today. Sorry, I missed.
Oh, no. Sorry. No. Licensed skydiver. I've jumped 28 times and absolutely love jumping out of a plane. Love obstacle course racing. So if anybody's heard of Spartan races, I love doing those. Yeah. So I just love being outside, just doing things that are keeping me active. And
you want to go hella skiing? Are you into, do you do any snowboard sports or skiing or anything?
I'm a boarder, man. I love snowboarding. I'm actually going to Park City, Utah here in about a month to go snowboarding. So
yeah, we're going to be in Breck in January. So
love Breck.
Yeah, man, we'll go. Yeah, if you want to do a Spartan race, we'll do that too. Let's get something going. I'm in the same boat as you. All right, cool. So what's the best thing or memory that's happened to you or your family in the last 60 days?
The best thing that's happened to me or my family in the last 60 days?
Something positive there.
Ooh, something positive. Oh man, what's the best thing that's happened to us last 60 days? That one's, I'll tell you what, my wife just celebrated, she's not going to appreciate me telling her everybody this, but she just celebrated her 37th birthday in November. So I'm blessed. We've been married for 14 years. We have 3 beautiful children, and we've got an amazing household here. So probably been the most exciting thing that's happened in the last 60 days.
That's it. That's all you need. A birthday's great. Yeah. Birthday's great. Okay. And then finally, name 1 or 2 people who've been most influential to you or your success.
Oh man, these are good. Most influential people. I'll tell you this. My wife has been probably one of the most influential people, and she may not know this, but every single time that I've had an inflection point throughout my journey, as both on a personal level and as a entrepreneur, it has always been a result of my wife kind of giving me that push. And, you know, like I mentioned to you, 2018, I just got finished walking away from the franchise business, and I'd spent a couple of years before that trying some other stuff I mentioned. And she sat me down and she's like, look, you need to get focused. Like you just need to pick a lane and go be the best at it and just stay focused and just figure out what you want to do. And I needed that kind of kick in the gut to kind of get me going and realize like, okay, she's absolutely right. And, that was the journey of multifamily, and I haven't wavered since. I mean, it's laser focused, hyper focused. And here we are today. And there's other examples like that along my way that she's just been an integral part of getting me over the hump, so to speak, when I needed it. So she's definitely been influential for me. And then I would definitely tell you my partners, Brian and John, because they've made me a better entrepreneur as well. Like I told you, I have certain strengths and I have certain faults, and the things that I'm not good at, they've helped me grow in, whether that be personally, professionally. Maybe it's a skill set that I didn't have before, like marketing, for example. I hate marketing, so I just can't stand it. Brian is great at marketing. John has an eye for marketing. And so I've learned a lot through those guys, and I've acquired some skills over the years by working with those two. So I would definitely say that, my partners have been probably the biggest influencers on me because we work together every day.
Yeah. So. Yeah. It's awesome. Number one partner, wife, crushing it. Yeah, always. Yeah, sounds like it. My wife is she's like a marriage family therapist by trade. And so she is like, it's the same. It's like, hey, Randall, you need to be doing this, 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 and this. And it's always helpful, and whether she knows it or not. So yeah, good stuff, man. Hey, how can people get in touch with you if they want to hear about what you got going on, maybe some offerings you've got, whatever's happening? So how can
So if you found this conversation enjoyable and you want to connect with me, I want you to do me a favor. I actually want you to go to iTunes, and I want you to leave Randall a rating or review on his show. And I want you to take a screenshot after you leave him a rating or review. And I want you to text it to 832-743-1400. And if you text me that screenshot, I will make sure to personally reach out to you and schedule a free introductory call with you and me, and we can see how we can help you.
That is money. I love that.
Surprisingly, most of the agents we speak with got into real estate hoping to gain passive income and become work optional. However, only 1 in 5 ever start investing. Most are simply too afraid to start. Once you get educated by listening to this show, you'll be able to overcome that fear and become the 1 in 5 who are finding financial freedom. Don't miss a single episode. If you want to stay up to date, the best way is to make sure you're subscribed. So if you haven't done that, go ahead and do it now. And we'll catch you on the next episode.